Okay, question number 4 is we've been given a statement of financial position, which is a balance sheet. We've got a list of balances here, we've got a list of liabilities, and we've got a list of equity. We've got some further information, or actually, no, sorry, we've got an income statement. We've got information from an income statement down the bottom. And we've got some final bits of information here. And what it says over the page is, let me see, it says prepare a fully classified statement of cash flows for Digger using the Dirigentoro for using the direct method, 30th of June 2014. So I know I've got to prepare a cash flow statement. So I'm looking for my cash transactions. Now I'll just have a quick look in my additional information. I've got an interim dividend. It was declared and paid. So that's a bit of information that could be useful for. The original cost of the equipment sold during the year was $180,000. The accumulated depreciation of the equipment was $85,000. So we've sold some equipment during the year, and ordinary shares were issued during the financial year. So we issue ordinary shares for cash. So I can sort of look at this and go, the difference between here and here must have been a cash sale. My dividends, does it tell me? Interim dividend was $10,500. Do I have any other dividends payable? So that must have been declared and paid. Ordinary shares. I sold some equipment for cash. So it looks like I'm going to have to rebuild my equipment account because it's a little bit more than that. Looks like I've sold some land or purchased some land as well. So now we've got to go about building our, or finding our cash entries, cash transactions. Now the easiest way for me to do this is work my way through the list of things that are here, and I'll tick them off as I go. Right. So first things first, I'm going to look at my accounts receivable. So I'm going to rebuild my accounts receivable account. So my accounts receivable, now it tells me that my accounts receivable has an opening balance of $49,500 and a closing balance of $32,000. So I know my accounts receivable is a debit balance because all my assets are debits, my liabilities are credits, and my shareholders are credits. So my opening balance will be on my debit side, $49,500. And I'm going to bang in my closing because I already know that piece of information as well. It's $32,000. Now what goes through my accounts receivable? So what goes through my accounts receivable? That's right. What goes through is sales revenue. So sales will increase my accounts receivable. So sales, because what I'm looking for is my cash collected from customers, 2024,450. 2024,450. And cash collections is the other thing that goes through. So let's grab my calculator, 49,500, which is there, plus 2024,450, comes down to 207,350. So that'll make this side 207,350. And what we're looking for is the difference between here and here. So I'm just going to deduct 32,000. 204,950. And that's my cash collected. So I'm going to highlight that one because that's going to go into my cash flow statement. Alright, next one is my prepaid insurance. Shall I do my prepaid? I've got an insurance expense here. So let's do prepaid insurance. So my prepaid insurance, now it has an opening balance of $8,000. and I've got a closing balance. Closing balance of 6,000. And we've got down here insurance expense. So my insurance is my insurance expense is gonna actually be on this side. Is 7,000. Gives me 13,000. 13,000 on this side. And the difference between here and here must be my cash for insurance of 5,000. I'm going to highlight that because that's going to go into my cash flow statement too. Next one down, I'll tick off prepaid insurance. My next one down is my inventory. My inventory goes hand in hand with accounts payable, so I'm going to do these two together. So, my inventory, my opening balance in my inventory is 88,000. And my closing balance is, yeah? No dumb questions, sorry Zoe, only smart questions. Well, you can put 2013 or 2014. Open, closing, same thing. If you do it exactly the way I'm doing it here, no problems. Yeah. Dates, no worries. Unless it asks for dates, don't put dates. Okay? Alright, so I've got my opening inventory and my closing inventory. What increases my opening inventory? Well, that'd be purchases. But I don't know what my purchases are because it doesn't give me that information anywhere. What decreases my inventory? Yeah, cost of goods. Cost of goods, and that piece of information is given to me down here. It's 1315,000. 1315. So from that I can work out a balance. So 1315 plus 163. Because my brain's not working too well this morning, I'll do it old school. 14. So that must mean I have to have 1478 over here. Difference between here and here, if I deduct my 88,000, oops. No, that's not going to work. So 1478 minus 88 equals 1390. Now, I haven't got a cash item in there, but I use that to build my accounts payable. Because my accounts payable is where this purchases number helps me balance. Now, so I'll zip straight down to I'll tick off my inventory because that's now done. So I zip down to my accounts payable. I've got an opening balance now of 93,000. 93,700. And a closing balance of, what is it? 130,000. Okay, so what goes through my accounts payable is, what will increase my accounts payable is my purchases. So I take my purchases figure and I transfer it down to here. So purchases of 1390,000. How much does that come to? So I've got that figure already plugged into my calculator from back here. So plus 93,700. 148,300. Yep. So what's the difference between these? Because this will be my cash paid. Between here and here, so I'll just deduct 130,000. Equals 135,700. and I'm going to highlight that number, because that now goes into my bank reconciliation, not my bank reconciliation, my cash flow statement. So I can tick off accounts payable.